It's 5 o'clock on Tuesday, August 17th. I'd like to call to order the Administration Committee meeting. I'm assuming someone's here and ready to do roll call.
Yep, that's me. So our administrative assistant is out for a couple of months, so I'm filling in, so on a deployment. So Supervisor Long,
Present.
Supervisor Cook,
Present.
Supervisor Ard,
Present.
Supervisor Peterson,
Here.
Supervisor Peavy.
Present.
We have a quorum.
Thank you. I'm hoping everyone had an opportunity to review the minutes from our meeting last month. Were there any comments or edits or changes? And hearing none, the minutes will stand as published. And public comment. Do we have anyone that would like to speak to the committee tonight? Any public comment? Last chance, public comment? Okay, we'll move on to our business items, and we'll start out with the financial report for the current one.
I was going to say, it's completely blank. All right, so this is the financial report through July. Probably not nearly as interesting as the history report that Jonathan's going to give for our 2020 audit. Everything is pretty much on target and on track for 2021. There aren't any large deviations that we need to point out, but I'd entertain any questions that you might have on the budget year to date.
Any questions for our county administrator or Leah, for that matter? Okay, well, I guess we're going to move right into the 2020 audit report presentation.
All right. Well, thank you for having me here tonight. My name is Jonathan Sherwood. I'm a manager with Clifton Larson Allen. I've been responsible for the field work for the county's audit now for quite a few years here. So I've got a decent amount of historical information stored away here as well. So I'm going to be covering just a brief handout here, a 5-page handout versus the 100-plus page audit report that we pulled together as part of it. So if there's any questions that come up along the way, please feel free to let me know. I'd be happy to address them along the way.
Just a quick reminder, it's probably been a few years since we've had maybe any accounting or finance classes, so.
So I'll try to do my best to incorporate as much jargon as I possibly can and then put you all to sleep. Now, my goal of the handout is to keep everything high level and just pull out the key pieces for you. If there's any additional detail, we do have obviously Ken and Leah here as well who do a great job helping pull all this together as well. So hopefully, if there's anything I can't answer, I'm just going to say, well, Leah's going to answer it for me. So based on that, I will start out here with start out for you here tonight on page 1 of our audit summary report. So this first page is a lot of information here, but there's some very key pieces that I'd like to cover for you. First and foremost is under the audit opinion. We do issue what we refer to as an unmodified opinion in the accounting world or in the auditing world. It's the highest level of assurance that an outside auditor can come in and place over your financial statements. That's what we're striving to do. That's what our goal is annually. So we're happy to report that we're able to do that. And again, that's a lot of work and effort go into pulling together our audit report, so I can't thank the county staff, Leah, her department, Denise and her department in the treasurer's office, all the other various department heads that have to put up with a lot of our questions and being able to get all of these requirements satisfied so we can actually issue the financial statements out on a timely basis. So very much appreciate all that work and effort that goes into there. The other item that we have to discuss for you as part of that's new for your audit opinion this year is there's some just various accounting standards that get updated and changed the last few years. It feels like we've been having a new accounting change every year. So that's what that second bullet item is there, is we actually had to introduce a new accounting standard for you, is GASB 84. I won't bore you to death with it, obviously, but it is a very technical change into the report. So when you do see the full audit report, some of those schedules in there will look a little bit differently than what you're used to seeing in the past. Next, we also do issue a report on the internal controls of the county. So how are the various systems in place to help detect is there any fraud, misstatement, material misstatements or that kind of thing that go into the financial system of the county. So we do a report on that, we test those controls, and then this is the part of the report that we do issue 3 what we refer to as material weaknesses. 2 of them are repeat findings from previous years, and there is a new item just to mention to you tonight as well. The first being material audit adjustments, just because we're proposing audit adjustments to the records of the county. They rose to a level of a significant dollar amount is really what that is a measurement of, not necessarily the number of adjustments, but the physical dollar amount of those changes in order to prepare the financial statements. So overall, last year in 2019's audit report, there was about 46 audit adjustments that we proposed, and in this year's audit, in 2020's audit, we're down to 36 audit adjustments that we've proposed in order to get the numbers in a shape, in a form, in order to make the financial statements. I want to highlight that first because, like I said, I mean, we're still going to have this finding, I think, for a few more years, but I know that it is something that we're working towards to reduce the number of audit adjustments that we can get, and that is, a testament to the work that's being done in the finance department. And to your earlier report that Ken just gave as far as your budget to actual numbers, let's be honest, the numbers you guys really care about that you do with your day-to-day budgeting, a lot of these journal entries that I'm referring to at this point don't impact those numbers. They are strictly for getting the audit report done in its complete pristine shape in order for us to actually give our audit opinion over. And I'll highlight a couple of those as we go through. One of those items actually did really lead into the third item, which again is a new item for you just to bring up to your attention at this, at the committee level for you. And that's the fact that during the course of our audit, there was significant work that we needed to do to reconcile fixed asset records. And a lot of this happened to do with the highway department going into and comparing those from their systems that they're maintaining on their end into the county-wide system that we actually audit and get the information out of. So I was working with Leah quite a bit, and she had a lot of work on her end to do as well to get those fixed asset records kind of cleaned up and accurate overall. And I know that Leah and I have had quite a few discussions as to what improvements to the process, what needs to change internally in order to make this finding be eliminated. And I know a lot of that's actually being implemented currently, and our hope is obviously for next year's audit that we would eliminate this finding. But there was significant entries related to this specific area of the audit, which is why the reason that we felt it necessary just to make the committee aware and the board aware at large that it was an issue during the audit, it's being corrected, so hopefully it's just a one-year item and we'll move forward from there. Outside of that, we do also prepare a single audit or a compliance report, which is required by the federal government with all of the federal and state money that's received. And at this point, there are no findings in order that are necessary to report at this point. Before I get into some of the other financial data, any questions on any of that? Fantastic. The nursing home audits, we do issue that as a standalone report on its own, so that's a separate audit report that gets incorporated into the full county audit as well. And then just a couple other items that are not part of the audit, but is just services that we provide and help the county with throughout the year. There's a couple of filings with the Department of Revenue. That's what that Form A is. There's an unaudited version that's due in May 15th, and then there's an audited version, which is the big deadline of July 31st, which we obviously met this year. And then there's a data collection form as part of the single audit that's due on September 30th. We're working on making sure that all of the latest COVID funding requirements and how to properly report those back to the federal government. We're working on making sure that all that's in the proper form. It seems like this year, every 2 weeks, we're getting new guidance on how to properly report that back to them. And then finally, as part of the audit home, the nursing home work, there's preparation of a Medicare and Medicaid cost reports, which is also performed by our firm. Moving on to page 2, this is, again, high-level kind of summary data of the various funds of the county. Page 2 here, item number 1 is the general fund, which encompasses basically everything else, or the general workings of the government are reported in this fund. And when we look at these types of summary data like this, we always jump down to the current year change is kind of about three-quarters of the way down the page. That's the first item that I usually highlight to say, okay, how well is a government performing from one year to the next? And then we go from there and kind of back our way up and kind of explain that change. So for this year, our total fund balance change of about $2.7 million, and your unassigned fund balance number increased to about $2.3 million. So what that means is those are your true reserves of the county, of your general operations, your day-to-day operations. We increased it by about $2.3 million, which if you compare it to some previous years, on paper it looks like, oh my gosh, that's a whole heck of a lot of money. You know, what happened, what changed? You know, in 2020 here, the easy answer is COVID. So it's various favorable budget variances is the way to say it. Your revenues were increased over what you adopted as a budget, and a lot of that came in during the second half of 2019, towards the end of the year. A lot of that COVID funding from the federal government was released to the county, entered into the county books, into the bank accounts of the county, which wasn't obviously budgeted for during your budgeting season. So that's one of the reasons why this change is appearing here. The other side of it is the side that we can control, and when I say we, the county can control, is the expenditure side. So obviously during COVID, during 2020, a lot of the discretionary spending is how I've been kind of describing it. A lot of those supplies and those types of purchases that you would historically have made, a lot of that was kind of turned off the tap on that spending. Let's see how COVID goes. It's a very common approach that a lot of the local municipalities took. Well, that ended up resulting in a favorable budget variance when it came to expenses. Your expenses actually came in, I think, $4 to $5 million underneath what your total adopted budget were, which obviously then led to, we got more money in the door, we spent less money outside of the door. Those two factors is why we have such a significant increase in fund balance. And again, that unassigned fund balance, I use it's the true reserves. If you had to shut your doors as a county and still support and do your job, that's basically how much you would have left in order to support the day-to-day operations. So that's why I've kind of highlighted there a couple other rows of that $19.5 million of the unassigned fund balance. Compare that to the total general fund expenditures. Again, that's what we spent for the entire year to run the general fund of $41.6 million. So how much in total true reserves do we have of those total expenses for the year? And it's roughly 47%. So just about half of the year, essentially, we could run without taking in another tax dollar, another public charge for service, or anything like that. So that's a very important measure that a lot of outside agencies are going to look at St. Croix County and say, how are you doing financially? That's a ratio that they're going to run. And then the county also does have a fund balance policy to state what should that minimum number be. So your fund balance policy was adopted a number of years ago, and that policy should be about 35% plus or minus 3%. So we're clearly in excess of or meeting our fund balance policy. And as a general rule of thumb, from an outside auditor perspective, we usually say that we want to see about 33% of your general fund expenditures at a minimum. That is a minimum recommendation that we would say, and not a target. So from that standpoint, we then take a look at, you're at 47%, we're financially healthy. How do we compare to your other counties, your other peer counties in western Wisconsin? So we do a number of counties in the area, and we're anywhere between 48 to 50% of general fund expenditures is what we're seeing. And obviously, like I was kind of stating earlier, that a lot of municipalities took the same approach that you did, where you got a lot of that COVID funding in at the end of the year, and then you also dialed back some of that discretionary spending, which we know we're going to have to start catching up on during 2021, 2022 down the road. So what I'm getting at is you're right within what I would expect to see from an outside standpoint, as well as comparing it to your peer counties in the area. 47% I wouldn't say is extravagant over the top by any means. You're financially healthy. I want to stress that to other, those that would read these financial statements and then possibly make some other conclusions from there. So. Moving on to page 3 is your special revenue funds. So these are all specific funds that are set up to track a very specific purpose. The revenue sources going into them are restricted for those purposes. So the first one being Health and Human Services Fund. Over the last number of years, you can see again that current year change. We've kind of had an up and down kind of trend that we're seeing there. And again, I can look at the current year change of about $854,000 is a positive. It's a net income to that fund. Again, one of the main reasons that you're going to see that in Health and Human Services, again, is COVID. A lot of that additional services and those types of things due to lockdowns and just not being able to provide those services is one of the reasons why that dramatically increased. There's also a decent amount of COVID funding that went into the Health and Human Services funds as well. And then again, that discretionary spending as well was basically cut and not made during 2020. So those are the true reserves, again, for the Health and Human Services funds. So when those expenditures start ramping up in future periods, those reserves are there to help offset those costs. You can see your current year tax levy that went into Health and Human Services fund over the 4-year trend. It's slightly increasing, and I know that that's discussed greatly during budgeting times, but you can just see that trend going back to 2017. Your other special revenue funds that we present in the financial statements, or we're tracking them separately. The 2017 column, this is the last year we get to see some kind of what changed in 2017 into 2018. As a reminder, in 2018 we adopted a brand new finance system, so that's why you're seeing some of these balances all of a sudden disappear in 2018. So your aging programs in ADRC, that got folded into HHS during 2018, so that's where that information is being reported. And when it comes to these other special revenue funds, these are the reserves at the end of the year set aside for these specific purposes. And really, so long as we're aware of this trend, what is the revenues coming in, so are there specific grants that are set aside for these, or in the case of like the Stop Drugs Fund, where you see that's a negative number, that's a program that's heavily reliant on donations. So if this continues to go negative, what is the trend? I know it's not a very large dollar amount of it, negative $4,800, but it's just something to keep an eye on from when it comes to a trend. If this continues to go negative, what is the results, or what are we going to end up needing to do? Either reduce your expenses, supplement with property tax levy, or something else like that from the general fund. Overall than that, like I said, we are making kind of a change in some of these other funds that were just established. So we're paying attention to the trend, and the trend at this point does look positive for all the other ones. We're kind of building up a little bit of a reserve to hopefully use in future periods. Item number 3 are your capital projects funds. These are these are funds that are meant for just your capital asset purchases or your big ticket, large expenditure items that you're seeing there. Again, in 2017, we basically closed down a lot of those funds, combined them all into one fund, the very bottom row of capital projects fund. And then we did have the St. Croix River Crossing Capital Projects Fund. It was its own fund there for a little while. That Capital Projects Crossing project has been completed in 2020 as far as the expenses, any restricted grant dollars and whatnot that were being tracked separately. Those were all exhausted and spent during 2020. That's why you have no balance there. So at the end of 2020, we had about $7.8 million in total leftover reserves to be spent on future capital projects that are tracked in this capital projects fund. There was no new debt issued for any of these projects. We did have, it was supported as well by a transfer, so resources from the general fund were transferred into the capital projects fund as well as from the highway fund. So there was about a $1.9 million transfer from the general fund that went in here to support these activities, and then there was a $1.4 million transfer from highway into the capital projects fund. And then as well as we recorded the sale of some fixed assets by about $80,000. So the total revenue's in there, and then what I wanted to kind of highlight is we spent out of that capital projects funds just about $9.6 million of projects that were accounted for. So that's why it went from $14 million. We spent quite a bit of money coming out of there. We ended the year of about $7.8 million. The main major programs and projects that were completed during the year, some parking lot work out there, obviously was a pretty large, substantial dollar amount that came out. Some circuits, court, and IT projects related to COVID for distance working, distance learning. Various plexiglass and whatnot purchases were made for some of the courtrooms, and a lot of that was tracked out of this fund. And then lastly, the other major item that was completed or some residual work done for the highway building was completed out of there. And again, some of this work to pull this capital projects fund information definitely led to my comments on that additional item to make you aware. So those fixed asset records, quite a bit of the work that went into that directly impacted this number here. Specifically, the sale of the old highway building and how that was recorded and how we needed to get that reported properly in the audit. So that's the work that basically led to these balances here. Item number 4 is our debt service funds. So again, 2017, we were tracking various debt issuances separately from each other. In 2018, we combined all those to track them in a single debt service fund, which to me is actually the norm. That's how we normally see that done. So you can see the trend history here. We had about $323,000 left in that fund after we made our principal and interest payments for the year. And that those reserves will be used up as we start paying off this debt. It will be used up to pay off future debt service needs. In the current year, the county paid about $6.2 million in principal and interest payments, which is actually a decrease from the previous year of about $8 million. So, I mean, our debt service requirements are leveling off from one year to the next. There was no new debt, is how I'll say that. There was a debt issuance, but it was a refinance, which I can highlight for you later here. Make sure I'm not missing anything. I did have a note here that the refinancing is going to result into a savings of about $115,000 over the life of this new debt. So a very positive thing for us. To switch gears a little bit here on page 4, these are our enterprise funds, also known as business type activities. If anybody does remember those old accounting classes that you used to take, this is full accrual. So some of the balances that you did not see in these previous pages, you now will see on these next couple of pages here for your healthcare campus, the nursing home, and then the highway department. So those items are going to be capital assets and long-term debt are the two big ones. And then there's another one referred to as the WRS pension assets that you're going to see separately within these financial statements that are just a note disclosure in your government-wide statements is how that works. So again, looking at your healthcare campus, going all the way down to the current year change in net position, we're going to see a total loss for the year of about $440,000 to the negative. When we look at that, we're saying, okay, how did we end up there? And this does include two items, depreciation expense and then this WRS expense, which are non-cash transactions. They're true expenses to the cost of providing care at the nursing home, but they're not necessarily costs that you can really control at that point. It's not cash leaving the door, so to speak. So the depreciation expense is about $594,000, and then the WRS expense is another $14,000. So roughly you're looking at $608,000 of expenses that impact that number, that $440,000, that really again are non-cash transactions or items, which those would directly offset each other. You would end up resulting in about a $150,000 income for the year if you just excluded non-cash items. So overall, the comment on your healthcare campus is the inputs that you're able to control, your day-to-day expenses, actually resulted very positively during 2020. And that's a similar message that if we look at the 2019 column as well. So because we had to have a large investments a number of years ago, building that nice new facility, it's being depreciated at a greater rate right now, which obviously then is a non-cash item to lead it there. One item to also pay attention to is actually all the way up on that balance sheet summary. The very first line is the operating cash and investments. Last year we had about $32,000 in reserves that were sitting in there in 2019, and in 2020 we're back down to zero. So we do have a little bit of a cash flow issue, specifically in the healthcare campus, and a little bit of that is directly related to the accounts receivable line, and I don't have exact figures as to why there's a delay in processing. Besides, I know that COVID definitely impacted claims being submitted and being paid during the year. So that's one of the reasons why you're going to look that your accounts receivable balance increased from $350,000 up to $555,000 during 2020. So that's part of the reason we have a cash flow issue within the nursing home. There's nothing that we were doing differently from collections or anything like that. So. The only other item, again, the WRS assets in 2020, you're going to see that as part of the balance sheet pension asset deferred outflows. You'll see in the next page that it does kind of skew these results a little bit, so keep that in mind, that it is impacting your overall balance sheet here for you. Moving on to the highway department. We've got a change in net position of a positive $1.6 million. Some of the main contributing factors to how we got there. Operating income, so the operations of the highway facility, $988,000 to the positive, and just based on the work that was performed by the highway department. Then there was also about a $1 million contributions of fixed assets or capital contributions. Part of that was from the state of Wisconsin for salt shed storage was a large piece of that. And then also the transfer or the contribution from the capital projects fund in the completion of, or the additional items that went into the highway facility. So that was what made up the additional $1 million. There was an offsetting gain on the sale of the old highway building, and then we took those proceeds at the county level and we transferred them from the highway department into the capital projects fund to kind of offset the costs that were incurred to build the facility. So that was kind of an in and out, kind of netted each other out a little bit there for you. And that's how we end up at the change in net position of $1.6 million. Moving on to the internal service funds. These are, again, our year-end balances of our internal service funds. And when we look at these, it's basically just a measure of, are we increasing, what is our trend? Are we increasing our fund balance, or are we decreasing it from one year to the next? Are our premiums that we're charging to the various departments enough to cover our claims? And again, happy to report as a result in 2020, that is the case in pretty much all the funds, with a slight decrease in the health insurance fund, which obviously I know that's an item agenda here for you tonight. So you're paying attention to that fund very closely. And I think this was actually a budgeted shortfall that we were looking for in order to bring down those reserves in the health insurance fund, bring them down a little bit to help control some of the costs of premium increases in the past. The only other thing that changed in your internal services funds is the health retirement liability fund. That basically closed as we had a change in retirement obligations. So we closed that fund and transferred those remaining surplus into the retirement health savings fund. So you can see that those two lines kind of merged into one here in 2020. Lastly, here are the total long-term obligations for the county. All of the general obligation bonds, obligation notes, compensated absences, various pension-related items, including the WRS item here for you. So again, there was no new or brand new debt service requirements during the year. There was that debt issuance of about $2.4 million, which was used to refinance or lower interest costs over the life of those debt services. The item to highlight again for you, it is not a typo under that WRS pension asset liability. It seems like it flips every other year and it drives our formatting people crazy. It's a liability in one year and it's an asset at the next year. So this is the county's share of the statewide retirement system plan. Down in Madison, they've got assets on the books which are greater than the obligations that they made. So this is our share of that surplus that we report in total for the county there of about $7 million. That is not an item that you can go and spend, obviously. They control all of that down there. So that does not impact the final number here, though, for you. This is that's the legal debt limit, which is set by Wisconsin statute. It's 5% of total equalized value of all property in the county. So of that legal debt limit, you're using about 10.3% of the limit, which again is, in the grand scheme of things, you would never at the county level ever approach 100% of not being able to issue any more debt. But as you would increase that percentage, at your high, you're at about 12.7% back in 2018. As you would even approach 25 to 30 or 40% of that number, the folks on the city council, yourselves included, would be very unpopular because the tax levy that would needed to support that debt would be extravagant. So.
Quick question for you. So almost $59 million. So for me, that kind of feels, and I use that word purposely, feels like a really big number. Of course, in my world, it is. But what I'd like to know is how do we compare? What are other counties? Where are they at? Are we above, below? Because I know that we're going to be considering some additional bonding later in the year. And so I'd like to get a better picture of where we stand comparatively.
Sure, absolutely. Again, I would do it on the percentage basis, and I would absolutely use my 10.3% figure down there. So where are you in the ballpark of your peers, realistically? I'm trying to think off the top of my head some of the other counties in the area that had large construction or large bonding issues. And for the most part, nobody is going to be above 15 to 20% of their total legal debt limit. That would be, in my case, very highly leveraged is what I would use, or a lot of outstanding debt. On a percentage basis, St. Croix County at 10.3%, as I look at it on paper, I would say that you're not highly leveraged at all. In fact, I would say that you do have borrowing capacity available to you. I will definitely default to any financial advisor that would be out there that would be working with you to help issue bonds, to more appropriately say what you'd expect for interest rates and that likelihood. But in my experience, 10.3%, I would not say that you're highly leveraged or it should be of concern to you. Other than that, that concludes my comments as far as the numbers go. Page 6 is more of an FYI, and Lee and I have already discussed quite a few of these issues. These are going to be upcoming GASB standards, which thankfully COVID delayed this a little bit for us. So if there's one shining silver lining for COVID, it's, for me personally, I didn't have to implement half of these standards, which were originally required to in 2020. We get to delay those until 2021. But just some additional items that we'll be working with in order to make sure that we're staying in compliance and keeping everybody happy. Any other questions that I can answer?
Other questions? And thank you to Leah and her staff for helping you out and getting the numbers you need. And thank you, Jonathan. It was really good. Appreciate it. I feel much better about my last accounting class. Maybe I learned something. Okay. Let's move on to our business item number 3, a consideration of a health insurance plan design changes for 2022.
This is Alicia Schwartz. She is our account manager with JA Counter. Thanks for being here, Alicia.
Thank you. Thanks, everybody, for letting me come and talk a little bit. I think you guys have a slide deck. Yep, sweet. Okay. Again, my name is Alicia Schwartz. I'm the dedicated account manager to the St. Croix County. I meet with the HR team regularly, with the benefit consultant, Linda Skoglund, who I think met with you all last year. So I'm going to talk a little bit about what we're looking at for 2022 in terms of rate projections. We'll start out with a little bit of a claim review and a national benchmark just to compare how the county is doing against what we're seeing nationally. So the county is invested in a claim analytics tool called Springbuck. This tool we use to perform quarterly reviews of your plan, just to make sure that we understand how the county is performing. We do this quarterly review and pull out any trends that we're seeing that indicate action. So is there anything that we can do to have a positive impact on the claim experience? So we also are able to use this tool to benchmark the plan against the national average. So Springbuck does collect all this data and provides us with benchmarking so that we can compare your plan against your plan experience against the national benchmark. So you'll see the county in row 1, the county is in blue at the top, in the gray on the bottom in each row is the benchmark. So in the first row, you'll see PMPM. This is an initial that we use often in the healthcare industry. It indicates a per member per month spend so that we can really make all of this information relative regardless of employer size. So it's not an employer's total spend. It's averaged out by per member. So in the first row here, we're looking at a current total medical cost. This is showing you a rolling 12 months. So this data is through June of 2021 and goes back to June of 2020. So the county plan is at $449 per member per month, as opposed to the national benchmark, which is at $410, so slightly over. In the next row, you'll see the breakdown of inpatient medical care. your highlighted piece here is price per admission. So 22,000 for the county versus 19,500 for the benchmark. And then we're also looking at price per day for an admission average. And again, above the benchmark. This is pretty typical for the state of Wisconsin. This is not specific just to the county. Our medical rates in the state are generally higher than the national benchmark. So not what we love to see, but nothing that I would scream red flags over. In row 3, in the last row, we have different quadrants here. The left side is outpatient medical, so again, slightly over what we're seeing in the benchmark. We have emergency room care here, and then on the right, we have average prescription cost by prescription alone, and we're significantly over benchmark. But then if you go to the cost per member per month, we're under. So what this tells us is that there are probably a few members on the plan that are driving most of the cost of your overall RX or prescription payout. So that just means that there's a few high-cost drugs, probably life-saving medications. So happy that we can offer those. Any questions on that benchmark? Great. So we also use, let's see, this is the total spend on your plan altogether. So the Springbuck tool is collects data back from December of 2019. That's when we started this data analytic collection. You'll see an overall trend of an increase in the last 2 years, which is pretty typical. We all know medical costs aren't going down anytime soon, so we'll anticipate that to go up slightly. It's not atypical to see the big fluctuations month over month. This indicates specific high-cost events, injuries, serious illnesses, those types of things. We're also able to capture certain timelines. So you'll see here we've highlighted this time of COVID so that we can really measure and keep an eye on any trends that we're seeing as you know, how COVID has impacted the health plan. We've also have a line here indicating some changes that we've made to the plan so that we can keep an eye on the changes that we made and how they are impacting the plan overall. So if you remember last year, we made the decision to sunset the retiree plan in June of this year. We also started partnering with Aletheus, which is an advocacy tool that helps us connect employees with high quality, low cost care. And then Omada is a coaching program that helps support members with diabetes and hypertension. So we're hoping to see that improve the claim experience overall. Any questions on that slide? All right, so let's talk a little bit about benchmark relative to the plan itself. So we're looking at 4 different things. So in the upper right-hand corner, sorry, I'll back up. This is a Mercer benchmark. We had 23 employers participate at a national level. So the bars on the left will be national. We also have a Wisconsin benchmark, and then specifically public administration benchmark, that's national. And then to the right of each box is St. Croix County. So at the top, we're looking at the employee exposure. So their deductible, which as you can see here, the county's doing really great. I'm a lower deductible compared to all the benchmarks there. The next one is out-of-pocket maximum. So what's the total amount that the employee and or family could spend in one given year? Again, below benchmark, which is great to see. So on the left side, we'll shift to monthly premium. So really good, strong, robust plan usually translates to higher premium, and that translates well into this graph here. We'll see we're a little bit higher than the national and local benchmarks. And then the employee contribution, I think this is a great news thing, is the county is really providing a great plan at a really low cost to employees. So really generous contributions from the county. So the next slide is one last snapshot just related to copays. So you'll see your prescription copays on the left, again below benchmark, and then your medical copays on the right, again below benchmark. Any questions on that one? Super. I'm okay with it. So let's talk rate projections. First, for 2022, we had our actuary put together a projection, and they are looking at a 5.6% increase. We are recommending no changes for the 2022 plan year. We talked about we had done some changes in 2021. We wanted to see how that works with the plan. Keep status quo for now. There are 2 years of claims data that go into the actuarial formula. With that claims data, we also include formulas for COVID impact. We use the 9.5% increase in our medical cost trends across the board, and then a projection of your claims specifically with a padding of 2%. That's all I got. Short and sweet.
Quick question then, the 5.6% increase is an increase in cost to the county and not the employees, is that correct?
Yep, we would spread that amongst both. So both the county and the employees would share in that increase.
Yeah, so the way it works is we establish a premium, just like if you were buying an insurance plan from an insurance agent. Even though it's a self-funded plan, we establish a rate. And so the county pays 90% of the rate and the employee pays 10%. So when the premium goes up 5.6, both of us go up by 5.6%.
Wonderful. Any other questions? Thank you, Alicia. Appreciate your time.
Thanks for having me. Have a good night.
So this is a voting agenda item. I mean, normally we have changes where we're saying we're increasing a copay or changing this or changing that. And even though there are no changes, I wanted to get a vote of acknowledgement that that's acceptable so I can finalize this number in the budget and move forward.
So it's, thank you. Second?
I'll second.
Second, any further discussion or questions? Okay, all those in favor of acknowledging the acceptance, please acknowledge that by saying yes.
Yes.
Yes. Any opposed? Thank you very much. All right, we'll move on to the next business item, which is establishing the library levy. We have a few items to discuss on this particular item.
Yeah. Let me get caught up just a second here on my notes. All righty. So, library. So the library calculation is complex enough in most years, but we're going to add an additional facet for you to consider this year. So generally, let me explain the basis of how we're calculating this. So we take the circulation numbers, it's rural circulation numbers, and cost per circulation divided by, which is calculated by dividing by the total operating cost of every library. So we calculate all of these things. Wisconsin state law says that you're required to fund those libraries at a minimum of 70% of that rural circulation calculation. So that's a minimum state requirement. St. Croix County has been generous and is historically here funded at 100%. So this is the column right here where we have 100% funding. So we do two additional things after that. So one of them is we back out the Hudson Joint Library back down to 70% and redistribute that to, we call them the injured libraries. When Hudson became a joint library, they were reimbursing rural circulation numbers to the other libraries, and then at some point they stopped that. And we did this calculation to try to recapture some of that back down to the state minimum of 70%. This is about a third of what that total cost is. So that's, we've been doing this for about 5 or 6 years now. The other adjustment that we made then, and we started doing this last year, was hotspot funding. We had done a pilot program for hotspots. They were popular. We looked for a way to continue to fund those into the future, and this is how we're doing it. We're doing it through the library levy. So that's the other column. So then with those adjustments, so 100%, these two adjusting columns, we come up with a total dollar amount that we're going to levy for the libraries. Add in the out of county for 49,000, again, 100% of rural circulation numbers. We come up with $1,096,000. That $1,096,000 on this very tiny spreadsheet here is basically divided by the municipalities that aren't already funding their own library. And we come up with a rate, and that rate is .0002645. I can't read that, I just remember it. But that rate then is how it's calculated. In order to be exempt from the county library tax, you have to support your own library. As a standalone library, you have to support the library at least the same rate that we are going to be supporting the libraries. So you have to levy at least .0002645 against your equalized value in support of your library. And we calculate this for those municipalities so they know the exact dollar amount of support that they're required to provide to be exempt. And they always are exempt. I don't know if I've ever seen anyone that fell short of that and didn't meet the exemption. So they do that. The Hudson Joint Library operates under a slightly different state statute. So a joint library has to be 3 years, average of the last 3 years amount of support. So it's not trying to match our level of support, it's matching their 3 years of prior support. So a different formula, and they meet that and they make their exemption. So that is normally where I would stop this speech and then ask you guys to vote on it. But we're going to add an additional wrinkle at this point. So we've been working with the Hudson Joint Library, with the Library Planning Committee and a host of other people to try to come up with a solution for an issue that the Hudson Joint Library has, in that their level of funding has fallen behind because of that different funding formula, really. So when you only have to match the prior 3-year average, your rate of increase is fairly small. The rate of increase from our expenses for the other independent libraries, they have to meet it based upon a rate of growth of their community because it's multiplied against their equalized value. So if their community is growing, their rate of support to the library actually has to grow. And that rate of growth is faster, and we can probably figure that out by these two examples, than what that 3-year average formula is. So because the Hudson Joint Library has fallen behind, they've been looking for ways to generate additional revenues for the Hudson Joint Library. So the solution that we've come to on this is to do the exact same spreadsheet. So the 100% funding, the distribution to the injured libraries, the funding hotspots, but we've added a new column, and it's called the Hudson Agreement. And the Hudson Agreement has a $249,849 line item on there. That number is backed into, so it's the exact same rural circulation amount, that .0002645, multiplied by the equalized values of the 4 municipalities that make up the Hudson Joint Library. In the Hudson Agreement, those municipalities would agree not to be exempt from the library tax. So we would tax them. We would collect that money, which is that dollar amount, and then we would redistribute it to the Hudson Joint Library. So the exact same tax rate is being used under either scenario. So everyone else outside of those 4 municipalities, they don't see any difference between what was happening before, other than that distribution to injured libraries. It was 25,000 on the other page. Here it's 71,000, and that's because we took the full amount then. We were only taking a third of it before because we were limited to that 100%, 70% limitation. Since we're generating additional revenues, we can take that full amount. So the other libraries actually see a slight increase. But really overall what the target is that they are not being impacted by whatever the Hudson Agreement is. So what changes then on the tiny print is column 2 here, which is the libraries that are exempted from the library. That number is altered. The amount of libraries that are taxed increases because we add the 4 municipalities in that are taxed. The rate stays the same, but again, that distribution then changes of how much every library gets. So I'm presenting this as an alternative and probably not as an alternative to approve tonight because there's actually several other steps that have to happen before we can get to this. For one thing, we have to draft an agreement that 5 municipalities are going to have to agree to. One is the county board, and the other 4 are the municipalities that make up the Hudson Joint Library. So the town of St. Joseph, town of Hudson, village of North Hudson, and the city of Hudson. All of their elected bodies have to adopt this Hudson Agreement in order to make this happen, because they have to waive their ability to file for an exemption. Under this scenario, you can see that the amount of support for the Hudson Joint Library is going up to $1.2 million. That's significantly more than what the local jurisdictions were levying. They were levying roughly $800,000, we'll call it, between those 4. So it's a 50% increase in the funding level for the Hudson Joint Library, which was the goal of what they're looking for. And those 4 municipalities then would not need to levy any dollars for the library. So that $800,000 that they were levying would go away. This $1.2 million would replace it. And that's how the funding of the library would work. So there's a couple of other things, I guess, to point out, more random facts on this. We talked with the state, and I don't remember who it was that we talked to at the state.
An attorney.
From our attorney, he says it was another attorney, so.
I'd have to look up his name.
Yeah. All right. So we posed several questions because this was a recommendation that had come from, I think, a legislative staffer that we could do this. That's where this idea came from. So we had several questions about the legality of it. Is all of this work? So this attorney from the state says, under his opinion, yeah, sure, it'll work. The county has the ability to levy. A county library levy is not subject to levy limits. Different than a municipal levy. So a municipal levy, they can't go from $800,000 to $1.2 million. They're subject to levy limits. So they would have to be able to afford it within their levy limit restrictions. We don't have any restriction on how much we can levy. So that's why it works. There was, let's see, I'm trying to think, there's a couple other points that I wanted to make sure I talked about. Timing-wise, I think we have, until the county board adopts our budget, this will need to be a part of that budget. But really, if I don't know by the October county board, we should probably just stick with the status quo. So a lot has to happen between now and then. It does look like all the pieces are available there for it to happen. The County Library Planning Committee has been reviewing this. They're going to have another meeting in September and modify the County Library Planning plan that would talk about this funding mechanism in there. So that's an endorsement from our library planning group. If they do formally approve that, they seem fairly receptive though at their first meeting. And then the agreement between the 5 different jurisdictions has to occur. We have had, I think, 2 of the 4 municipalities already file an exemption though for this year, which, you know, the agreement is going to say that they are not going to do that, so they will have to then repeal that. So that's another little stumbling block in getting the details worked out here. But we have a little bit of time to work that out yet. So anyway, it's very complicated, and I'm going to pause now and answer any questions.
Supervisor Peterson?
I guess I heard somewhere that this might be creating a windfall for a municipality there, and what they do with that extra tax money they're bringing in if they don't have to, or if they in fact don't give it all to their library system with no input, how would we counter that?
Well, yeah, I don't think it's, so I wouldn't consider it, you know, there's 2 different points of view on that. One is the municipalities, so if you're talking about one of the four members, what they look at when they look at their books, and then there's their taxpayers. So their taxpayers are gonna pay 1.2 million in taxes to support the library, where they were paying 800,000. So their taxpayers will pay more, and it'll go to their library. So the taxpayers pay more. Now, that 800,000 that those four municipalities were levying, they're able to reduce their tax levy by that. There's no legal requirement, though, that they have to, so that might be the tax windfall that you're talking about. They could re-spend that on something else, instead of support for their library. So there's a couple of different things that could happen there, but their taxpayers will pay for it twice then. I mean, they're gonna pay for it reallocated, and they're gonna pay the 1.2 million as a part of a county library tax. But that's their local decision of whether they're going to do that or not. They do have a risk too in this, in that this is a 1 year at a time agreement. So the county board is going to have to adopt this plan every year, just like we do the whole library tax levy. We do this every year. You guys have all seen this resolution before. It will have to come before the county board for approval every single year. So a future county board may go, yeah, we don't want to do that anymore. And that really leaves those four municipalities in a lurch then for how they're going to support their library if they went and spent the money on something else.
Thank you.
I'll just make a couple of quick comments, if I may. I think certainly the intent of this agreement is for the municipalities to reduce their levy by the amount that they were taxing citizens for the library. And we hope that they will do that. The other couple of things I want to point out is I don't want to bring up the past, but in the past, there's always been, discontent on the agreement that was reneged on and the fact that the library isn't being properly funded. And I think that with this agreement, we are returning to the point where the library is properly funded and we're reinstating that agreement. So it really addresses both of the issues that we've had in the past. Obviously, the consequence is even if the municipalities abide by reducing their tax by the amount that they were charging for the library tax, it still would be a slight tax increase for the citizens in the municipalities. But I believe, and correct me if I'm wrong on this number, Ken, but I believe it was about $10 per $100,000 valuation. The net amount?
Yeah, no.
So if the municipalities live up to their end of the agreement and do decrease their levy, the net tax increase would be fairly nominal. And I think if people know that it's going to support the library as a community asset, they would probably be okay with that. And that's coming from a person who never wants to raise taxes. But I think that's the net bottom line as far as I'm concerned. Other questions or, yes, Supervisor Hart?
I'd like to hear from the library directors in St. Croix County regarding this plan and see how the numbers shake out for them. They are ultimately the ones who have to deal with the cost of circulation and with the lack of participation previously by the Hudson Joint Library. So I'd like to know where they're sitting on this idea.
We do have Barb Krieger from the Deer Park Library. She's the president of the County Library Planning.
Yes, and they were attending, and I agreed to allow them to speak during this particular item. Hi, Barb.
I wasn't quite planning on addressing this particular point, but as referenced, the County Library Planning Committee met, was the very beginning of August. And at that meeting, we had, all of the county library directors were in attendance at that meeting. And this proposal was the primary focus of that meeting. The initial impression of the directors is positive towards this, so long as the mechanism is in place for the funding of the agreement that was not honored by Hudson by the library when the joint committee was, joint library was formed. The resolution was passed at the meeting to, now if I can get this correct.
I can help you
don't.
out.
Yeah.
So they passed a motion to direct
Corporate counsel.
corporate counsel, the county administrator to work up language to incorporate an amendment into the plan that would allow for this mechanism. And I think at this point, it will be going to a planning committee, library planning committee in September for approval, and I think to this committee, then to the board.
Yes. But the initial reaction has been positive with the directors. It was felt to be a fair resolution, a fair funding mechanism for all of the libraries, including Hudson.
Yeah, my two comments quickly. What residents will see on their tax bill though is an increase in the county share of their taxes. And maybe a decrease in the municipal, but not necessarily. So people are gonna look at it as the county raised my taxes. And I don't know if they're gonna look at it as the county raised my taxes to support libraries, but if I remember a tax bill, the library levy doesn't show up as a separate item, so it's gonna be an increase in that. So people are aware of that. And my other concern is the hotspot funding. I did ask Administrator Witt if he could get me the distribution, because the hotspot funding is not based on circulation. The hotspot's based on funding. You got a different spreadsheet there, Ken? Okay. He's got spreadsheets. Yeah, he's got spreadsheets. No, I haven't seen this ahead of time. But my concern, until he brings this up, is remember the library tax is only on the townships. And my concern is that the townships shouldn't be paying for all the hotspots that are not necessarily used we know they're not used just in the townships. They're used townships, cities, and villages. So it's not circulation based. I know it's only $8,000, and in the whole county budget, that's not a huge amount. So I asked Ken to find me the circulation. And by the way, I'm not against hotspots. I just don't know if it's fair for the townships to pay for all the hotspots. I think that should be divided over everybody in the county. Yeah, boy.
You asked for data, Bill, you're getting it.
You ask the librarian for something, we'll find it for you.
Judy Ochterhoff, supervisor, and Barb will say a lot more. And I have 2 points. Is out of the 11 libraries in St. Croix County, there's only 4 of them that only have 2 hotspots. River Falls has 27 hotspots. So that community is paying for 25 of them. New Richmond has 17. So that community is paying for 15. So there are a lot of communities that have a library that are paying extra to get more hotspots. And I would say hotspots are vital almost no matter who's paying for them, because we're all concerned about broadband right now. Well, the reason most people take out hotspots is because they don't have internet service or they can't afford it. And I don't want to take that away from any constituent in St. Croix County. And I don't know if Barb has any more to offer, but that's my comments.
Go ahead.
Even though it's tiny, it's easy for me to see. And yes, hotspots do circulate to people in our municipalities, as well as in our municipalities without a library. In this chart, you can see that, can you go over one couple more to the, yes. So column AA is the total number of circulations, and this is for 2020. And remember, 2020 was an odd year with the COVID pandemic. Several of the libraries were closed for, a couple of months. And even when we did reopen, we weren't taking returns. So our hotspots weren't returned and circulated on to other people. I know at Deer Park, I had one family who were so grateful that they happened to have the hotspot checked out on March 17th, and they had it until the 1st of June. They do not have internet service at home, and they had a high schooler. And so they were so appreciative. And yes, that's just one case, but I'm using that as an example for why the numbers are a little skewed in 2020. You can see, so then the circulation to residents with no library was 311. In 2021, from January 1st to the 15th of August, there have already been 279 circulations to residents with no library. So you take that into consideration, 185. We still have the rest of August, September, October, November, December. We have 5 months, four and a half months yet of circulation for this year. And who knows what's going to happen. I mean, hopefully schools won't shut down, but we don't know, or if people will be working from home. I know at Deer Park, and that's where I can speak personally because I see our numbers, we would not be able to afford 3 hotspots. Those hotspots always have holds on them. I gave Mr. Peavy the sheet that says the number of holds as of 12:45 today for each of the libraries. Only one of the 11 libraries in St. Croix County does not have holds on their hotspots as of this afternoon. So even libraries that have large numbers of hotspots have holds on them. Do we serve people outside of St. Croix County? Yes.
Can you define what's a hole in a
What a
hotspot?
hold is? Okay. Okay, so for a library, non-users, that's okay. Hey, use our libraries, use your tax money. A hold is when a library holds an item in our collection, but it's checked out right now, and you want to be able to have it in the future when it becomes available. You put your name on the waiting list.
I'm sorry,
That's
I misunderstood. I thought you meant a hole,
Oh,
not a hold.
a hold. I'm sorry.
My mistake.
No, my enunciation. But it's still good to understand what that is, that you're on the waiting list for the hotspots. And do our hotspots circulate outside of St. Croix County? Yes. I can testify, Deer Park's, close to the Polk County border. So, of course, we have Polk County users. We do collect Act 150 money from that county. So does that go to help funding our hotspots? Yes. But the appreciation that users have for having the availability of hotspots, even with the broadband programs that are initiatives that are being examined, it's not going to happen overnight. Hotspots are available now and can be used. at a great service. And all of our hotspots say funded by St. Croix County right on the cases when they circulate, so that the county receives recognition that they are helping to fund them. Any more questions, Mr. Peavy?
Supervisor Cook, did you have a question?
Thank you. My question was going to be, are there holds on the hotspots? It sounds
Yes.
like there's a lot.
There are.
And so, which seems to be, especially in the environment that we're living now, and it's such the demand for broadband, we've talked about it a lot, really kind of a crime that we can't provide more hotspots, that we have 3 at a library. That seems wrong to me. Is there a way that we can use some of our ARPA funds that are set aside for broadband to buy more hotspots, fund more hotspots sooner?
Maybe.
I will tell you, the libraries would be thrilled to have that availability.
I mean, it seems like we could get some data from the libraries based on the holds and how long and the number of people, and come up with some kind of, obviously it could be an unlimited, but I mean, it can't be
Right,
unlimited.
right.
I mean, it has to be within reason, but it seems like, isn't there an opportunity to fund more
Oh,
hotspots
we would be happy.
with ARPA money instead of waiting for the broadband that we're hopefully spreading out
And
across the county?
Some of the libraries have searched out grants, in Richmond, for example, to get additional hotspots. Not all of us have as much time or staff to search out grants that are available. I know some of New Richmond's are funded by the Friends of the Library. You know, once again, I'm an advocate for Deer Park. We're the smallest municipality in the state to have a public library. The village, the municipality stretches its budget, I mean, very honestly, to fund the library at the level that they do. But we've made sure we have hotspots. Deer Park was one of the, New Richmond was one of the very first, and Roberts and Deer Park did it about the same time. So here's this small community in the county that saw the need and the importance for this, for our residents. Some of the residents have internet service at home, but it's so unreliable. It's so slow. They're just thrilled when their turn for the hotspot comes up. So, can you tell I'm passionate about this? But it's,
Supervisor Peavy?
it's a good use of county money. And I'm a taxpayer, and I'm willing to have my tax money go for this.
And my comment is not that hotspots are bad. It's that the whole county should pay for the hotspots, not just the townships. You just said the hotspots say funded by St. Croix County, but they're not. They're funded by the towns in St. Croix County.
Right.
That is my point. It should
Yes.
be on the county levy. It shouldn't be on the library levy. I mean, we're talking a library levy of, what is the total, Ken? Over $1 million. That's $1 million tax that only goes to the towns.
Right.
And I just think it's only $8,700, but that $8,700 should be on the county levy, not the
Not
towns.
in the just
Yeah.
the towns.
Not just the towns, because the village of Deer Park doesn't pay county library funds.
No,
But you pay it in your village tax, but that is my point.
Right.
Maybe it should be, and I don't know where Ken would find $8,000 in the general budget, but he does miracles, so, yeah, in his pocket.
well,
And this, we're not going to vote on this tonight, is that correct?
Oh, no, we're going to vote on it
Okay.
tonight.
and to that, I will make the point that the number of libraries that have more than the 2 hot spots, those are being funded by the municipalities that have a library. And when you look at this in the total numbers, it's a small portion of it. And it's also marketing and making more and more people aware that this is available through the libraries and that they do work. Thank you.
Well, I think we'd all agree that hotspots are critical, and I think the question of who pays for it is very legitimate. I'm tempted to say at this point, maybe we could hold off on re-looking at that until next year we get a little better idea of what the circulation numbers look at during a so-called normal year of 2021. That might be one approach, unless you feel like we want to dig into this at this point.
Excuse me, hotspots are not the agenda item. The resolution on the levy is. I could see placing hotspots as an agenda item, as a future agenda item, and gathering more information from the library committee regarding hotspots. But for tonight's discussion, we need to address the levy. The resolution for the library levy.
Yeah, and actually,
The
if...
the intersecting point is that the library levy includes the hotspots in the levy. So it's a piece of that levy that's in the resolution. It's part of the dollar amount. So if you removed the hotspots from there, that rate would drop. I mean, by very little, but it would drop.
Well, and correct me if I'm wrong here, but I think if the Hudson Agreement that we've been discussing comes to fruition in the next month, that might actually give us an opportunity if we felt up to changing how we fund hotspots.
Yeah, you potentially could. My recommendation for you this evening is to approve the resolution, which is drafted in the status quo format. So not taking in the Hudson Agreement. The rate will be the same either way. If you want to come back a month or 2 months later and amend the resolution to include the Hudson Agreement, the tax rate is the same under both scenarios, which is what the local municipalities need so that they can establish their budgets. So that's how come we do it so early in the budget cycle, is other people are waiting on this number so they can set their budget amounts. Increasing the rate is problematic if we tell them one number and then it goes up. Decreasing it would not be if you want to remove hotspots at a later time, because they're already going to be above that number, so it's not going to be an issue. But that's where we're at right now. So I am looking for a vote tonight on the resolution, and it is drafted in the status quo format.
Supervisor Peterson?
My take is that, with the hotspots, I think we ought to leave them just as they are for the time being. I would like to see what the outcome of our study is on broadband. Also with the implementation of 5G, there may be some improvements there too. So I think we need to have a look at it, yes, but to do anything right now without, all the facts that we should have is premature. Just my thoughts.
I would move
Supervisor
to
Ard?
approve the status quo resolution establishing the library levy.
And second? Second, Supervisor Peterson. Okay, any other further discussion or comments? Supervisor Cook?
So I'm happy to hear that we're having a discussion of an alternative or a change to the funding of the libraries tonight, with this Hudson Agreement. I think it's positive that the County Library Committee is optimistic potentially about it. And because I'm pretty sure all of our I think almost every supervisor, if not all of us supervisors on the board, see the value of libraries across the county. And so I think, finding a way to get past the past and move forward has always been something that I, hope we pursue, so we don't have the same conversation every year and talk about decisions that were made by many people that aren't even in their positions anymore. So, I think we're on the right track. That being said, as last time we voted on this, I can't support this levy. My constituents that I've heard from in my district, where the downtown Hudson Joint Area Library is, want this library funded. And so to support a levy that reduces that funding, though I understand the impact on the other libraries and I sympathize with that, I won't be able to support this resolution. I really hope that we can move forward and have the conversation, though. I know Supervisor Peavy mentioned about the you know, it will increase the county taxes if this goes forward. I would hope as well that if that were to move forward, the municipalities would reduce their tax rates. But I think ultimately, the communities that are, that will be potentially raising the taxes, the county taxes on the communities that are impacted, the supervisors that represent those districts will have to answer to those constituents. And, you know, I'm prepared to have those conversations with my constituents, so, but I will not be supporting the motion right now.
And I'll add to that, I have never supported this in the past. I will do so only on this occasion because I'm cautiously optimistic, that my nature, that this Hudson Agreement will actually come to fruition, and therefore, that's the reason I'll support this at this time. Other discussion? Okay. All those in favor of the resolution signify by saying aye.
Aye.
Aye. Any opposed?
Yay. Opposed.
Opposed. Okay. 3-2. Okay. Okay. Can we take just a quick 3-minute break, please? Thank you. Interrupt, but I want to get this show back on the road here. Thank you. And our next business item, we were going to go into the resolution amending the personnel policies. And the one person who's not back yet, I think probably is going to cover those.
So the two policies that we're looking at tonight is the vehicle usage policy. So it's talking about the employees' usage of county fleet vehicles. No.
Sorry, you got back together quicker than I thought. Okay, so yes, we only have two, and the first one is a policy that already existed, but just not in the handbook. It was an operational policy. I'm not sure if you already said that, so sorry, okay. And it was general updates. There was a formatting, removed repetitive language, updated the department ownership. A lot of the tasks were referencing finance, and this is now transitioned to facilities. And then removed any language referencing leased vehicles, which is no longer a practice. And then we removed instructions for fleet vehicle check-in, as referenced on the internet site for specific instructions and guidelines. Removed language referencing the turn-down rate because now we pay the IRS rate across the board. So that was all for that one. I can go on to the next one. We only had two this time. So the next one was building access policy. And that was combining and replacing the issuing keys to employees policy and employee identification badges policy. And then it references where those are in the current handbook, Articles 9, Sections 12 and 16. Basically, it was, again, overall changes were formatting and combining the two policies into one. Removed a statement regarding badges that HR distributes the badges because, again, facilities now manages that process. And that was all we had for those, for this batch. I do want to give you a heads up and apologize in advance that next month we may have closer to 16. So, or actually October, I'm sorry. You'll get a break next month. But we'll have probably 16 or more in October, so.
Gives us something to look forward to.
Yes.
Questions for Tara? Give no questions. Can we have a motion to approve the resolution?
So moved.
Second.
Supervisor Peavy, second. Who's the second? Supervisor Ard. Any additional discussion? Given none, all those in favor signify by saying aye.
Aye.
Any opposed? You're good to go. Okay, we'll move on to number 6, the resolution approving the county administrator work plan and work plan report.
Yeah, thank you, Chairman Long. So the county administrator work plan is basically the established goals, the items that you're instructing the county administrator to work on, to prioritize over the next year. It's sort of a way to check in and measure performance. This does sort of constitute the performance review of the county administrator also, and the county board chair and the administration committee chair did sit down and talk with the county administrator about this and helped establish some of the work plan goals for the following year. Starting though with a report on the prior year work plan. One of them was the government center project and the space needs. That one's still ongoing. Of all the work plan items, this is the one that is still in progress, but I think the committee is making good progress on it, and you'll see an end result product coming out of that pretty soon, I think. The next one was strategic planning. That one, for all practical purposes, is completed at the county board level. You still have a formal adoption, which I think is the next item, and then it'll be on the county board for formal adoption. And then the department heads will have some additional work with strategic planning also, but the county board's role in setting that strategic plan is pretty much complete. Item 3 was the employee town halls. This was something our new PIO had come up with. And we've implemented those. I think they've been fairly successful. If you'd see the numbers that we're reaching, you know, out of our 650 employees, we had 153 watch the first episode and 135 watch the second episode. My ratings slipped a little bit, but it was summertime, so maybe my ratings will come back up in the fall here. But we're reaching a lot of employees that we're getting the information directly to. So we talk about strategic planning, we talk about budget priorities, and we talk about health and wellness benefits that are available to the employees. So we're reaching a lot of employees directly, and they're able to ask questions live online and get the answers immediately. So it's a good communication forum, and we're going to continue to do this into the future. 4 was realign county services post-pandemic. You know, this one's probably a little more squishy in its outcomes. So yes, things changed after the pandemic. Probably not a lot of significant changes, but there has been a little bit of change in how we look at remote work, and we've altered a few things there. And then the 5th one wasn't actually on the list originally, but we spent so much time on it that I added it on, thanks to Supervisor Cook's insistence. But broadband, and so we've put a lot of effort into this, and I think when that report comes out this fall, we're well poised to use a lot of the money that we knew was going to be coming for broadband. Now, we didn't have any idea we were going to get 17 million, but since we did, and we have a plan that's going to be available of how we can spend that, it's going to work out well, timing-wise for us. Looking ahead then for work plan ideas, and open to other suggestions that you may have, but strategic planning, like I said, we need to wrap up those departmental work plans. That's really the implementation phase of the strategic plan, so that a year from now we can come back and say, okay, this is what we've done to implement these strategic goals that the county board had set for us. I think that's a really important step, and I want to make sure that it's really well documented and detailed, and we're able to provide some concrete evidence for you in the future. So I would like to see that as one of the work plan items. The broadband, implementing those study findings. So it's great to create the plan, but let's take a step to start implementing that plan now. Facilities. So I listed this one as guide the government center project through the review process to the level of county board support. So I don't know if 19 supervisors support an expansion of the government center yet, but we will find out. So that's going to be something. So I didn't want to say build the government center project, because I don't know if I got the votes for it or not. But I will guide it as far as it can go. And then for employees, and this is probably out of the strategic planning, but what I'm looking at is creating a plan to improve the hiring effectiveness, and especially at the entry-level positions and our seasonal positions. That's where we're seeing the most competition. You know, if Taco Bell and McDonald's are paying $14, $15 an hour starting, and we're paying less than that, well, why do they want to come work for us then for a summer when they can go there and make more money? So we need to get more competitive, and that's one of the ways of doing it. Also, competitiveness is job satisfaction, and again, from the strategic planning initiatives that we have, talking about advancement opportunities for employees. And I have some ideas, mostly still in my head, but there are things I think that we can do to improve that amongst our employee group. So that's something that I would like to work on over the next year. So again, if you have anything else to suggest on that, otherwise this is the report and these are the goals for next year.
I guess I would be most interested in if anyone has any other ideas that might be appropriate to add or expand or modify in terms of the work plan ideas for the next year. Supervisor Peavy?
And maybe this isn't administrators. Do you see any issues with redistricting the county? Is that going to be a administrator? Is that all in the clerk's?
No, actually, community development is the one that ends up doing most of that. And that's actually going to be done here very, very soon. You guys are going to have a special meeting next week. I was going to tell you later.
Surprise, surprise.
Yeah, surprise, surprise. On that, and that'll be the initial step of the redistricting. So we got the data yesterday from the Census Bureau, Community Development. You know, they had a lot of fun with it, I guess, because they already have their first plan about ready to go. So we moved up the time frame of when we can make an initial recommendation on the first county board supervisory district. So I was hoping that we could meet before the committee of the whole, which is scheduled for next week, because I know you're already going to be coming here, so if I can double up on that. So tentatively, I have that scheduled for 2:30, I think, on Wednesday next week. Yeah. So we had a committee of the whole scheduled for 4 o'clock that day. So we can talk about that at the end of the meeting for the date of the next meeting. But that will be, and it's purely just for the redistricting issue that you spoke about, Supervisor Peavy. The following steps after that will be a public hearing by the county board on September 9th. We've moved the county board date from September 7th to September 9th at 5 p.m. to accommodate this. There's a Class 3 publication, which means publish 3 times in the paper 1 week apart and then wait another week and have a public hearing. So that's the very first date we could do that. So September 9th for the public hearing. That would be the county board adopting the tentative plan. From the tentative plan, we distribute that to the local jurisdictions. They create their ward plan. Once the ward plan's created, we finalize our supervisory district, they finalize their aldermanic districts, and all of that has to be done by the middle of November so that a Class A notice for elections can be published before the end of November, and nomination papers in your new districts can start on December 1. So normally a process that takes 6 months is going to be condensed into 2 months.
So maybe the question would be, do we really want to add anything to this work plan? I think you got enough on your plate.
I think its plate's full.
Okay, so any other questions? I think we're ready to hear a motion to approve the resolution.
I would move to approve the county administrator's work plan and work plan report.
I'd second that.
Second, Supervisor Peavy. Any other further discussion? Seeing none, all those in favor of approving the resolution signify by saying aye.
Aye.
Aye. Any opposed? You're good to go, Ken. Okay, now let's move on to number 7. We're getting close to being done. Resolution adopting the strategic plan.
So this is the formal resolution to adopt it. We have our vision and mission statement, and we do have a marked up copy of the strategic plan in the packet. I'm going to have our PIO, Adam Kostanek, go over that with you. So we made some changes to the final version that our consultant had given to us. They are not changing the meaning that came out of all of the work group that we had, but it was just rearranging of the language and maybe a little bit of change to the guiding principles. If you remember, Yang Yi had said that she didn't really touch the guiding principles. That was just inherited from the previous plan. Well, we had Adam review those, and he made some changes that he's recommending for us. Go ahead, Adam.
Yeah. So don't be alarmed by all the red you see. It looks worse than it actually is. Like Ken was saying, the guiding principles, that wasn't part of the strategic planning process, but I wanted to take a look at that just to make sure that it closely aligned with all of the work that we did during that process. I think overall the guiding principles do match up very well, but there's a couple minor things that I did make. So really when I was going through the strategic plan as a whole, I was looking at readability. So trying to make sure that this was readable to the largest audience that we can make it. Government terminology tends to be fairly technical, so looking at words that if we can swap out words that carry the same meaning but are more universally well known, that's what I was focusing on. Trying to remove some redundancies. So when we get to the guiding principles, the first thing that you'll notice is you look at responsibility, accountability, transparency. Those were responsible, accountable, transparent. I just added the LY to it for readability, just making sure that we're consistent across the board. One of the things that I did do is we had honesty on there. Honesty is really combined with integrity and transparency. So just focusing on combining those and trying to streamline all of the guiding principles, make it as simplified as much as we can. The other piece that I did is we made an effort during the process to be very inclusive in our language, and we used terminology like everyone and all. So there was a couple instances throughout the plan where we're referencing specific individuals, so we're referencing citizens, employees, and leadership. In some of those instances, I believe the second one is a good example where it says respect. We will treat everyone with respect instead of going into the individual populations. So that's kind of a brief rundown of what I did with the guiding principles. Are there any questions on that or any concerns? Good to go? Okay. The rest of the document is, again, really just looking at making sure that we're consistent, trying to find some terminology that I felt we could find simpler language for that would still carry the same meaning. So first one you're going to see is comprehensive. Instead of that, we put all-inclusive. There's a couple other areas where that next one says we crossed out to promote transparency. It's not that we don't want to promote transparency. I just felt that was combined with, that's already kind of covered in that statement, and we're almost turning that into two separate statements by having that. Recidivism, that's it's a term that we know in government. It's not a term that the general public is really aware of, so turning that into repeat offenses. I felt that a wider group of people are going to be familiar with that term. So those are kind of the general reasoning behind a lot of these changes. I'm not going to go into all of them because then I don't want to keep you here any later than we need to. And some of these, I went through my own statements that I had recommended, and I was also being redundant my first time through, so I cut some of my original terminology. So is there any questions on the rest of the strategic plan? Yes.
A real quick question on, and I don't remember if we talked about this during our sessions or not, but were the goals necessarily prioritized or just more random?
The goals were not prioritized.
Okay. I just have, actually, I thought it went really well. I had one suggestion that I'll make. And when you talk about the public reviewing this document and strictly from a perception standpoint, I thought maybe under the service delivery, we might renumber the goals slightly and just move goal number 1 down to goal number 3. And again, strictly perception from the public. So as service delivery, the first thing they would see is we want to improve the services. And then make you aware of the services. And then obviously we want to take care of our employees because that's critical to delivering service. So strictly perception.
I think that is a good idea.
Yeah.
I'm getting shoulder shrugs, but nothing other than nodding heads.
I like that idea, because it is, well, we value our staff, everyone who works with the county, for the county. It is the general public who will view this document and go, why aren't we number 1? But it starts the public off in looking at this document and saying, that's us. They're talking about us. And being the first one under that, I think is an excellent idea. And Adam, you did an excellent job on this document. So just to test the language, because we hear about plain language continually, and yet very few institutions in government are moving their documents to plain language. So with many of the communities that I work with on a day-to-day basis, I ask them to review the document. Edits were already approved and taken out. They read it and they felt like they were being spoken with, not to, but with. And it was language they could understand. The words they knew. There weren't big words that they didn't understand. There was no legal ease. So you've passed muster in a very difficult and challenging community that has great opinions. So excellent work, thank you.
I appreciate that, thank you. And I definitely agree with swapping out those goals. It's keeping the public and keeping our audiences in mind as to the flow of how they're reading it. That's very important, so I think that's a good change.
Other suggestions, comments? And can I assume that what will be presented to the board will be in the, without all the changes?
Yeah,
Or,
we will pull all
with
the red lines when it goes for the county board. It'll be just the clean version at
Clean
that point.
version.
So we've given you the marked up Frankenstein copy. But yeah, with your approval, it's a recommendation by a group that can approve the changes, whereas Adam and I can't.
Yeah, and
We can only recommend to you.
I promise not to include any red text.
Supervisor
I'd move
Peterson?
that we accept the resolution as amended and go from there.
Second,
I'll second.
Supervisor Cook. Any further discussion? Seeing none, all those in favor of the resolution signify by saying aye.
Aye.
Any opposed? Thank you, Adam.
Thank you.
Well done.
Thank you.
Okay, we'll move on to our last item. Resolution amending the 2021 budget for our ARPA projects.
Yeah, fun stuff. Okay, so we had a committee of the whole where we sat down and we talked about the $8.8 million that we've received, the first tranche of money from the federal government, and how that's going to be used. We went through a whole list of projects over a couple-hour period and came up with some recommendations. So that whole list of recommendations is summarized here on the background note. So you can see all of the projects. We've assigned them project numbers. These are the first numbers. That's how they're going to be shown within our accounting system, so that we're tracking each of them separately. They'll each have their own project number. That's the number the department heads are going to be most interested in, other than the dollar amount. It also shows here the years that we expect that those funds to be used in. So with that list of $8,480,000, I created a budget amendment for the 2021 budget to pick up any of those dollar amounts that we expect to use yet this year. So that's what this resolution is doing, is it's approving a budget amendment for all of the 2021 expected uses of funds. The 2022 and other future years, those will be added into the budget, so you will be voting on those really at that time when we approve the budget. And we'll have to kind of stop and point out different places where they are. But the other thing that we're going to do for you, I should say Leah's going to do for you, is have a report monthly that lists out each of these projects by that project number, the dollar amount approved, the dollar amount that's been spent. So really, you're going to be able to track it separately, just sort of like the KIP projects. You're going to have a separate page where we're tracking all of this money. It's significant enough and different enough that we'll create that separate reporting model for you. So that's everything that we've discussed so far. I do have one amendment to this resolution. Supervisor Fiedler came and spoke with me, and he made an impassioned plea for additional funding for some of the public safety areas that he felt maybe didn't get quite the funding that he thought maybe they should. So in review with Corporation Counsel, who said, sure, why not? What I'm looking at is an additional $320,000, and we had $328,000 left over that we hadn't allocated yet, but it'd be $320,000. It'll go for pretrial case managers. It'd be working in Justice Support Services, our new department. What we're looking at is, as a part of the issue during the pandemic was more people were at home, more people were getting into drugs and alcohol. They found themselves in trouble with the law. So we've seen an increase in those types of cases coming through the judicial system. And right now, when they hit our judicial system, they're dealt with by the district attorney's office and the sheriff's office, and they appear in court. Well, the whole idea behind our new justice services is to grab them at that pretrial phase and evaluate other opportunities that they may have, either through our treatment court process or programs that we have at HHS, refer them out to those programs. But what we need is those pretrial case managers. So this would create 2 pretrial case managers for the next 2 years. So it'd be $320,000, $160,000 each year. Those pretrial case managers, we're going to have some in our regular budget. This is 2 additional ones for 2 years, really to get us through the backlog of where we're at with all of the cases that are out there right now. So it's a ability to catch up. And then these would be limited term grant funded positions that would expire at the end of the 2 years, or maybe we see that there is the demand and we have the capacity to continue them. We'd have the ability to consider that. Or we could also allocate additional future ARPA dollars for it if we need to extend it past 2 years. So pretrial case managers, 2 of them for each of the next 2 years is what I'm looking for. And it'd be additional $320,000 added on to this list as a 2022-2023 expenditure.
Any questions? I'm sorry, go ahead, Supervisor Cook.
So it sounds like we have $8,000 remaining, and kind of reference to our discussion about the library, is there a potential to set aside at least some of that money for hotspots when they're needed? We don't know what COVID's what's gonna happen the rest of the year. I mean, I know we can talk about 2022 budget going forward, but perhaps we can allocate some of that $8,000 towards use for hotspots, and talking to library folks, they can come up with some kind of data to show us what that might look like.
Yeah, well, our very clever corporation counsel pointed out to me that the requirement for broadband within ARPA requires 100 meg service. So those hotspots are probably not at that speed. If they are not at that speed, they would not be probably ARPA eligible.
But could they be eligible under another category? I know the broadband
Right.
requirements are specific, but
Yeah.
either under the COVID-19 impacts or infrastructure or some other kind of category besides broadband. I know broadband's very defined, but.
I honestly don't know. I mean, I tend to think not, based upon my review of the regulations, but I really can't give an
Can we
informed-
set this money aside pending outcome of guidance? Because, I mean, I was in a seminar today on ARPA guidance, which changed everything that we're looking at in housing. And it's fluid. Day to day, it's changing. So we might see that this will fit in one of those niche areas that have been spoken so much of in the last couple weeks within this guidance.
Yeah, the 8,000 isn't being spent on anything until the county board tells me to spend it. So it is reserved until the county board unreserves it. And really, even though it's reserved by the county board can change their mind. So we have 4 million reserved for broadband. They may decide to increase that, they may decide to decrease that in the future. So you have the ability to do so. So all the power belongs to you. I am merely here to implement it.
And the other thing I would say with regard to the case management is that may very well be eligible fund or eligible expense for the opioid settlement mitigation money that's coming our way, but we don't know how much, other than it will be significant.
To that point, what he's saying is that we may end up reallocating a different pot of money to cover these same positions. Rather than ARPA, we may use opioid money. But right now, I don't have that available. What I have available is ARPA, and I need to put a 2022 budget together.
Supervisor Ard?
What I will say is that the idea of pretrial case managers, thank you, answer to prayers from my end of work, because this is something that early intervention is what keeps stability in lives that are out of control. So the idea of getting individuals at pretrial, that is a game changer. I can't even tell you how much I support this, because it will be a game changer for many, many people, and it will prevent them from coming to see me. So that is even better. I'd fully
Supervisor
support
Peavy?
that measure.
Yeah, mine a little simpler. I don't see a subtotal, so what is the dollar change we're doing in for the 2021 budget? Unless I missed the subtotal somewhere. Approximately. I thought that'd be easy for you. All right. Do we get our phones out and add on our phone?
1,125,000.
1.1 approximately? Thank you.
Oh, I'd like to make a motion to amend the resolution per the additions that, as described by Administrator Witt.
Right. So there wasn't a motion yet, so you don't have to amend, but you could
I can't
You
amend.
could
All right.
approve as amended.
Approve as,
Right.
with the addition of.
Okay, so then I will make a motion to approve the resolution as amended, as described by Administrator Witt.
Thank you, that makes my motion a lot easier.
There you go, sorry. Any further discussion, questions? Supervisor Cook?
I would like to ask council if he can look into whether or not we can use the money for hotspots under something besides category besides broadband in advance of the board meeting where we look at this resolution.
Yes.
Thank you.
Other discussion? Okay, we'll vote on the resolution. This is a budget amendment, so do we need a roll call? Yeah. Okay, caught myself. Go ahead.
Do you want a roll call vote on it?
Yes, please.
You don't need a roll call
Oh.
because this is just a recommendation to the county board.
Does the county board do a roll call?
The county board does a roll call through its procedures.
Okay.
You can or you can't. It's
No,
purely up
that's
to you.
fine.
It's not required.
I'm just trying to stay on top of that, and I obviously missed that. Okay. Okay, we will not do roll call vote, so all those in favor of the resolution as amended signify by saying aye.
Aye.
Any opposed? That passes unanimously. Okay, wow, we finished our business items. So request for future agenda items?
Yeah, the one request that I have for you is kind of what I spoke about earlier with the redistricting. And that goes hand in hand then with a special administration committee meeting. So I would propose next Wednesday at 2:30 p.m. Community Development asked for about a little over an hour to present the plans to you, for you to have a chance to visualize it, see where these boundaries are, and then make a recommendation to the county board for which plan option you like. I think they're only going to have two options for you. But we wanted to go over that in enough detail that you felt comfortable recommending one of them. And there is a population shift in the county. We're the third fastest growing county in the state. So there will be changes to the district boundaries, just so you know. Yeah, Wednesday, the 25th at 2:30 p.m. That would be followed up, you have a 4 p.m. committee of the whole meeting to review KIP projects. So that's why I picked that date.
Should I just move in for the afternoon?
Yeah, that'd be great.
I guess the main question is, will that work for everyone? Can you make that work into your schedule?
Okay, I wasn't sure, thank you.
Okay. Yeah, it'll be tight. Okay, any other announcements, correspondence? All right, well, it's 7:03 and I get to adjourn the meeting. Thank you for your patience.